Ladies and gentlemen, Greg McCloskey from ForexLive.com. You know that the dollar versus yen is down sharply from my Kickstart video from earlier this morning. That was on the back of Bank of Japan officials talking and a little chatter about them potentially looking to sell bonds as early as the June meeting, upcoming June meeting. That sent the dollar yen lower and the yen higher. But what about the other cross-currency pairs? Well, they're also moving to the downside, including the euro yen and the sterling versus yen. And I'm going to focus on those two currency pairs from a technical perspective. What did the big move to the downside do for them? And what can we expect going forward? So let's get started. I'm going to take a look at the 4-hour chart in the euro versus yen. And if we take a look at this chart in last week's trading, note that the low price here came down and tested the 100 bar moving average on the 4-hour chart, found support. Buyers moved up to test the high price that we saw last week in early trading. This week found, although the price moved just a little bit above that level, we could not sustain the momentum. The high price going back to the end of April remains in play up here, 171.53. And the price started its rotation to the downside yesterday, and that was continued today when the price moved below the 100 bar moving average on the 4-hour chart, with the dollar yen moving lower in the process. We saw the increased momentum to the downside. That saw the price take out the low price from last week in the process, and also move down to test this green line. This green line represents its 200 bar moving average on the 4-hour chart. You have to go back to the end of April, early May, when the price last moved below that level, and we tried to stay below through it here. But when the price moved back above it here, that started the rotation to the upside. It saw the rally over the last few weeks of trading. So this is a key level from a technical perspective. We did get below the 38.2% retracement of this last move to the upside, which is a good thing. But as you can see, that was short-lived with the 200 bar moving average coming in play, and the price has since moved back above that level. So what does it say about the technicals for this currency pair? Well, we need to get back below the 38.2% retracement. We need to get back below the 200 we need to get below the 200 bar moving average on the 4-hour chart. If we're able to do that, that should increase the bearish bias for this currency pair. Note here that the corrective move off of the low price here did find resistance right near these highs right here. I had a horizontal line going across at that level because of ceiling here, ceiling here, ceiling here, push the price to the downside. Ceiling here, breaking above it, and then breaking back below it here, push to the downside, and then basing against it and moving to the upside here. So this level has some history at 168.65. Watch that level on the top side. Stay below, it's more bearish. Move below 38 and 200 bar moving average increases the bearish bias. If we move back above this level, however, we could see a rotation back to the upside here with the 100 bar moving average, the next key target. I promise I'd take a look at the sterling versus US dollar next. And I'm going to start by taking a look at the 1-hour chart here, and what we say on this currency pair is that the price highs that we saw over last week and this week, we're actually able to get above this May or this end of April high up here, which came in at the 200.513. We got up to 200.724 in the sterling versus yen, but could not sustain any sort of momentum above that. Above this level right through here, and we started its rotation to the downside. The corrective move to the upside here came up short of that level right here. We started rotation to the downside and trade here today. That move to the downside took the price back below the converged 100 and 200 hour moving averages right here, and rotated all the way down to the 38.2% retracement of the last move higher from the May low to the May high. That 38.2 came in at 197.14, and we are seeing a bounce back off of that level. So holding the 38.2% kind of keeps the buyers in play. If the price is going to go lower, we need to get below that level and stay below that level. Absent that, and this is just a corrective move in what was a bullish move to the upside. Let's go to the 4-hour chart, see if there's any clues off of that chart. And we take a look at this chart. I'm going to zoom back out here. We can see that on the move to the downside, we broke below the 100 bar moving average on the 4-hour chart. And that level is going to be the key barometer for the short term, I think, for this currency pair. That if the price is able to stay below that 100 bar moving average at 198.62, the battle is on between that level right here and the 38.2% retracement right here, where we found support earlier. So that's right now, that's how the technicals are playing out for this currency pair. Shifting, the bias did shift a little bit more to the downside with the break below the 100 bar moving average, but there's work to do on the downside with the 38.2% retracement needed to get to and through to increase that bearish bias, at least in the short term. So there you have it, a look at two of the yen crosses as they follow the dollar yen lower. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.